The upcoming 5 stocks were beaten down in 2025 and are now trading at a massive discount. This is very unusual because these companies are growing very fast and have great business models. The first stock is called Supermicro Computers, ticker symbol SMCI. This stock is down 70% from its all-time highs back in 2024 and is now trading under $30, which is a great deal because here you see the potential upside this stock has in the coming 3 years. And I will tell you right now why. Traditional service companies build servers similar to cars, because if you want to change the engine, you have to wait a year for the new model, and the same counts for servers, and that is much too slow for AI, and SMCI provides the solution. They build servers like Lego sets. They make interchangeable racks, cooling, power, and chips. And why it matters, when a new AI chip comes out, Supermicro can snap together a new design in weeks. Competitors take months. In the AI race, being first means everything, and Supermicro computer is always first. The second point is, liquid cooling is the new standard, it's green and it's cheap, and SMCI is the world leader in liquid cooling. They run pipes of cold liquid right over the chips, and this cuts electricity costs by 40%. For big data centers, that saves millions of dollars. So it's not just green for the planet, it puts money back into the customer's pocket. And it's basically the Switzerland of AI. It's safe and neutral, because some people worry, what if the demand for Nvidia chips slows down and maybe shifts to AMD or Intel? Supermicro is neutral. They have deep partnerships with Nvidia, but also with Intel and AMD. It doesn't matter which company wins the chip race, because Supermicro builds the stadium where the game is played. They're growing faster than almost any other hardware company in the world, and despite this explosive growth, the stock is trading at a massive discount. And this is because some temporary paperwork delays, which are being fixed. So right now it's like finding a Ferrari that is selling for a Toyota because it has a flat tire, and flat tires can be fixed. There are 17 analysts covering the stock with an average price target of $48, which is a 60% increase. Now we have to look a little bit more into the future. Here you see the forecasted revenue growth rates for the coming 3 years, which are looking phenomenal, and their EPS is expected to hit $3.75 in 2028. While growing your revenues 17%, you can definitely deserve a PE ratio between 20 and 30, and that shows you that the stock price will increase between 150% and 280% in less than 3 years. And that is why this stock is a great buy right now. The second stock is called SkyWater Technologies. Here's a sneak peek of the potential stock price increase in the coming 3 years, because this company is the only 100% US owned pure play on semiconductors, which is perfect now that globally tensions are rising and the government wants to bring home chip manufacturing. SkyWater is one of the government's big partners, and that allows them to build the most sensitive chips for spies, satellites, and soldiers. So when Pentagon needs chips that absolutely cannot be tampered by foreign adversaries, they call SkyWater. In 2025, SkyWater bought a massive factory in Texas, and that wasn't just the expansion, it doubled their ability to make money. And you can see that in the graph over here. So basically the company has hit an inflection point, and on top of that they're building right now the sci-fi future. SkyWater built the hardware for quantum computers, which is basically a supercomputer that's so powerful that it will be able to solve problems in seconds that take current computers thousands of years. Their quantum business grew 30% this year alone. They also built devices that can detect diseases from a single drop of blood. So really SkyWater is selling the picks and shovels for the quantum gold rush, and while all dream about it, SkyWater is manufacturing it. Now you know the story behind this company. Let's look at the valuation. Right now they're trading at a PE ratio of 7, which isn't expensive at all, especially if you look at their revenue growth rates. They are expected to increase their revenues next year by 35%, in 2027 20%, and in 2028 basically 18%. These are very good looking growth rates, and it's expected that they will have a meaningful EPS in 2027, with their EPS hitting $1 and in 2028 reaching $1.75. Now if you're growing your revenues by 17%, you can definitely expect a PE ratio between 25 and 40, and that means that the stock price will increase between 130% and 270%. So yeah, that's a very decent return on investment. The next stock is called ZETA Global Holding. This stock is down almost 50% from its all-time highs in 2024, and what's so special about this stock is that for 20 years the internet ran cookies, little tracking files that followed you around, but now Apple and Google have effectively killed the cookie to protect privacy. ZETA saw this coming 15 years ago, and instead of cookies they built a proprietary database of 235 million real people. This means while other advertisers are going blind, ZETA has 10 out of 10 vision. They know who the customer is, what they want, and when they are ready to buy. And they're doing all this while strictly following privacy laws. And AI is actually doing the work. Most companies are just adding a chat button and calling it AI. But ZETA launched Athena, a super intelligent agent, which doesn't answer questions like a chatbot. She acts like a highly paid employee. You can tell her, find me 100,000 people who want to buy a luxury car, and she will find them. Create the email, buy the ads, and measure the sales. This is called agentic AI, and it changes ZETA from a software tool into a revenue generating partner. Now in the software world, there's a rule of 40, and that is if a company's growth rates plus its profit margin equals 40, then it's considered elite. Now ZETA consistently hit the rule of 60. Now in 2024, a short seller tried to crash the stock with a false report to make quick profits. And to counter that, ZETA released a detailed audit proving their data was clean, and more importantly, the CEO and the company bought back $100 million of their own stock. And on top of all this, ZETA partners with the biggest names in tech, like AWS and Snowflake. ZETA was named Snowflake Partner of the Year because when big banks and retailers put their data in Snowflake, they use the ZETA's engine to activate it. And this gives ZETA basically free sales, because it means that Amazon and Snowflake effectively sell ZETA's product for them, and that is driving the massive growth with low cost. The company right now is trading at a price to sales ratio of 3.7. Analysts are pretty bullish on this stock, with an average price target of $30, which is a 45% increase from current levels. Here you can see the annual revenue chart and net income. It's definitely going in the right direction. And you can also see that over here, going from making 250 million to 450 million in less than 2 years. Now if you take a look a little bit more into the future, the company is expected to grow with these growth rates for the coming 3 years, which is definitely impressive, and at the same time hitting an EPS of $1.7 in 2028. Now a software company always deserves a high PE ratio, especially if it hits the rule of 60. And if you're growing your revenue 17%, a PE ratio between 40 and 60 is definitely possible, and that will mean that the stock price will increase between 200% and 400% in less than 3 years. So this is definitely an attractive software company. Next up we got Encore Energy, ticker symbol EU. As you can see over here, the stock has done nothing the last year. It's down 30% basically. And here's a sneak peek of what their potential return could be in less than 3 years. They are the only US uranium producer with 2 operating factories in Texas, and after the 2024 ban on Russian uranium, the US is forced to get uranium from their own country. And Encore Energy is one of the few companies that can deliver it today and not years from now. And this is a matter of national security. We are securing the fuel that powers 20% of America's electricity grid. And the positive point is that production is soaring and the costs are crashing. In the third quarter of 2025 alone, uranium extraction jumped by 11%, so the factories are running and the output is climbing. And as efficiency ramps up, the cost to produce each pound has plummeted. In 2024, it cost nearly $98 to sell a pound, and in 2025, the cost dropped to roughly $53. And this is what you call a definition of operational success. On top of that, they have a financial fortress. Unlike many small energy companies that constantly run out of money, Encore is sitting on over $100 million in cash. They have nearly 300,000 pounds of uranium in inventory. That is a stockpile worth millions, and which they can sell whenever the price is right. And now that AI data centers need massive amounts of power 24/7, wind and solar can't provide that reliability alone. Tech giants like Microsoft and Google are turning to nuclear energy, and to top it off, they do environmentally responsible mining, so Encore uses ISR technology. Think of it as water filtration for mining, so there are no open pits, no massive dust clouds, and no tailing dams. They recycle 99% of the water used, so it's the cleanest and the safest way to extract uranium while protecting the local groundwater. They're trading at a price to sales ratio of 5, which is pretty damn cheap, especially if you look at their growth rate. They're expected to grow their EPS 74% the upcoming 4 quarters, and their revenues 106%, which is absolutely massive, and this is visible in the revenue chart, going from making 30 million in Q3 2024 to be expected to make 32 million in Q4 2025. So they 3x their revenues in less than 2 years. And if we want to take a look at the revenues a little bit more into the future, these are the expected growth rates for each year, and this is absolutely massive. They're growing at massive growth rates and at the same time reaching a positive EPS. Now growing with these growth rates will easily give you a P ratio between 30 and 50, and that will mean that if you invest in this company trading right now at $2.4, that will mean you would have a return between 1,700% and basically 3,000% in less than 3 years. This honestly looks too good to be true, but yeah, we will have to see. Only time can tell us, but definitely put this stock on your radar. The next stock has probably the cheapest valuation in the stock market, and it's called BTDR, also known as BitDeer Technologies, which is a crypto miner that is turning into an AI infrastructure player by transforming their Bitcoin mining centers to data centers, and you can see that in their forecasted numbers. For the coming year, they're expecting an EPS growth of 150% and a revenue increase of 190%, while they're only trading at the price to sales ratio of 5. This truly doesn't make sense. The stock price got absolutely crushed lately, and it's absurd how cheap the stock is right now. It went down more than 60% from the all-time highs, and you want to know the reason for that? First of all, a little bit more more losses than expected, but at the same time they beat their earnings, so it's definitely not the end of the world. And furthermore, a fire broke out in one of their facilities, which destroyed 2 of 26 buildings under construction. And they stated no mining equipment had been installed at that moment in time, and the company doesn't expect this incident to have an impact in their current operational Bitcoin mine hash rate, which is a fancy way of saying how fast and efficient they're mining their Bitcoin. So this would be the best time to open a position in this stock, with all the possible bad news already priced in. And if you want to look a little bit more into the future, these are the revenue numbers that analysts are expecting for this company. So a very nice year-over-year revenue growth rate with these EPS numbers, and that will mean that the stock price in 2028 with a PE ratio between 30 and 50 would surge basically 400%, and in the bullish scenario 750%. So this is the reason why this company is looking so attractive right now, and that is why I'm buying every share inside. If you've watched until this point, smash that like button and only subscribe if you want to see more videos of me.